Sell those pops. Sell those pops. Welcome back, guys. Another great day comes to an end. Hope you guys had a great Tuesday, but it's back to work. It's Tuesday evening. We're getting ready for Wednesday's trading session. I got a lot of great trades setting up for Wednesday. Not just any Wednesday, FOMC Wednesday coming at us fast tomorrow morning. I'm going to cover all my favorite trades in tonight's video. That way you have a game plan to make some money tomorrow. As always, before we jump in and get this party going, make sure you subscribe so you don't miss tomorrow night's video upload. And if you guys enjoyed the video, you know what to do, right? Hit that like button for me. I appreciate you guys tuning in tonight and supporting this YouTube channel. But enough of the intro. Let's get ready for Wednesday's trading session. Got a big news event coming tomorrow. Got a bunch of great trades setting up on our radar for tomorrow. Everything is bearish right now. Nasdaq, of course, is bearish. S&P is bearish. Oil is bearish. Now, we're definitely still in the kind of the mode of selling the pops and shorting the bounces right now with this bear market. But you will definitely see tonight how markets, really all three of these markets, are really poised for a relatively strong, I don't want to call it a reversal, right? But definitely some relatively strong runs going higher here. We have rotation off the low, a very interesting pendulum swing on the crude oil. Don't get me wrong. I'm looking to short the bounces, I've really got some great areas up overhead here for some really big pullbacks tomorrow. And of course, as we go into the FOMC announcement tomorrow, that might be exactly what we get here. We still got those big spiking channels waiting for as well. So again, I'm going to cover all my favorite, obviously short trades for tomorrow. I'll also cover some nice reversals off that low. I can easily see some reversals coming off these lows as well. Some double bottom reversals. Would love to get some of those tomorrow into the FOMC announcement as well. Now, speaking of tomorrow, though, before we jump into each one of these charts individually, it is important that we all remember there are two big news events for tomorrow. There's that retail sales number at 8:30 Eastern time, which is great because that'll get us going nice and early tomorrow in our trade room. And then, of course, the big news of the day tomorrow is definitely the FOMC announcement at 2 o'clock and, of course, the press conference at 2:30. What you need to remember on an FOMC day is you got to get early in and early out. Anything after 12:30 Eastern time tomorrow, really the volume will be very thin. You're not going to be able to get good consistency on fills and exits. So my strategy on an FOMC day is always the same: early in, early out. I personally don't like to kind of gamble after that news comes out. It's not because you can't find setups, it's because the volatility is so extreme. Liquidity isn't that good. It's just there's so much risk involved. I always tell my students, save your bullets on an FOMC afternoon and bring it back and save it for Thursday, because Thursday is reaction Thursday. Thursday could be a very busy day for us in our trade room. So the general game plan for tomorrow is get there early. Don't miss that retail sales number. That definitely has potential to shake things up for us tomorrow morning, which is great. And then get out of there early, 11:45, 12 o'clock Eastern time. Again, for me, I'll be easing off the gas pedal going into lunch. And then, of course, we'll watch the fireworks tomorrow afternoon around the FOMC announcement. And there might be some fireworks. Now we're starting to think they might raise rates by 75 basis points versus 50 basis points. All that stuff is kind of noise at this point. The most important thing tomorrow afternoon is don't go gambling away all your chips tomorrow afternoon. Save those chips for Thursday, because Thursday is oftentimes the day when all the professionals, all the pros come back to their desks, and now they got some big ranges and usually some really big trades waiting on Thursday. So promise me you're not going to shoot yourself in the foot on Thursday afternoon trying to gamble. Save those chips for Thirsty Thursday's trading session. So Wednesday, pretty straightforward. Retail sales and, of course, FOMC in the afternoon. Don't forget, we'll be in our trade room tomorrow morning, 8 o'clock Eastern time, and we'll make the most of the smaller window of opportunity that we have. But trust me, the window is smaller on FOMC, but we'll make up for it on Thursday into Quad Witching Friday later on this week. Nasdaq, S&P, crude oil, everybody's here. Glad to see the whole gang is here with us here tonight. Now, I'm going to cover all my favorite trades on each one of these markets here tonight. Whether you trade one of them or you trade all of them, make sure you stick around all the way to the end because I'm going to keep things moving throughout the video tonight, talking about different trade setups, different variations, different advanced tactics, and you know how we roll. I'd like to keep the best stuff towards the end of these videos, so I'll give you a reason to stick around all the way to the end. Let's jump right in first, though, to the NASDAQ. NASDAQ, of course, like everything else right now, is relatively bearish here. There are a couple key components on this chart that are really kind of giving us the roadmap here for tomorrow. One of the major keys to our success tomorrow is this range, but not just a range with rotation off the low. Now, as you guys have probably heard me say many times before, and you've learned in our free trading classes on the website, bear market into a trading range, we want to sell resistance and go back into that range. As we talked about last night on the video, what happens sometimes though is the market will shoot below that trading range, and now as it starts to rotate higher, oftentimes these markets will tend to have kind of a slingshot kind of feel to them as that momentum, right, turns back for the bulls. This could easily end up slingshotting really all the way back up into these big highs up here. And knowing that is the case right now, you know, obviously we've got a top of a channel here. I'd love to sell back down again, but again, these types of rotation off the low like this has the potential to really slingshot going higher. And so you can definitely imagine I've got my eyes on some breakouts going higher here, but then let's not forget, let's back to planet Earth here. There's a big spike in channel on this chart right now. We'll go back to last night's video. I talked about this last night and the fact that we had that big bloodbath move down early on Monday. For the most part, this spike in channel is still in play. We get a deep pullback today, but we never got up into the base of that channel. If you watched last night's video, you kind of know what I'm talking about, right? Do not be surprised if this thing rotates off that low. We get some pop, right? Buying opportunities as we go higher. And then as we go into the end of the morning tomorrow, maybe into lunch, we start seeing this thing start to roll over and go lower. I would imagine too, the FOMC may be a factor on that short. Hopefully we can get that short coming off that high early in the morning tomorrow. You know, that would kind of be the ideal scenario here. So that's exactly the way I look at this market right now. We're definitely bearish. There's no doubt about that. This is definitely not a major reversal yet, but we got that rotation off the low. We got that big area for the short up above. So really at this point, how do we buy it? How do we sell it? You know, I think as we go higher here, you notice I've got this rising support trend line on this chart right now. So as we try to go higher here, it's going to be a little bit tricky for these bears to justify that short, a lot of momentum, and that rising support trend line. I really think there's potential for really a couple different breakouts going higher. Like for example, I love the idea of a 1, 2, 3 move, right? A 1, 2, 3 breakout. Nice strong move going higher, finding a new channel off that high, marking off that low, looking left, finding some trap levels and grabbing that trap. Now that trap, right? That trap is basically riding the momentum of that move. We don't expect that trap to continue to race and keep going. It might, but that's not really what we anticipate at this point. We anticipate the market now getting up around those highs, and we can start looking for that short back down from there. That's one of the kind of breakout patterns I like on this. I also think too, if we can get kind of an overnight pop on this, a strong pop up, a shallow pullback to the moving average, a higher high in price, I think that is also a worthy option. I would definitely want to get into that one though before we get up around that 11,600 area, right? It's a really nice breakout pattern. Strong move, real strong pop, shallow pullback, drives all the pullback traders crazy. That higher high in price confirms it's not just one of these, right? A V top, because that does happen a lot in these bearish ranges. And so we get a strong move up, shallow pullback, higher high. I like that I like that trap as well. I'll cover a few more breakouts a little bit later on in this video. I got a couple more breakout patterns I want to show you guys a little bit later on in this video. So if you want to learn more ways to buy it as we're going higher, we'll talk more about that a little bit later on. Let's say though we get all the way up now, right? We find that channel, we grab that, right? That pullback, and now we find ourselves up around these highs. Okay, now remember, we haven't been this high yet after that big drop. And so you have to assume there'll be a lot of sellers waiting up here with really deep pockets. Now, if you've got a, six-figure account, $1 million account, right, 7-8-figure account, you can sell into this stuff, right? The big money players, they can sell into this because they've got the deep pockets to keep selling if it keeps going higher. For the rest of us here who are on those retail accounts, right, going higher, what you want to think about is as we take out that high, now we have all of that momentum now for the bulls. And so we got to be careful up here. And so this is exactly where that one, that two, right, that two try failure. Think about where those stops are for those buyers. Let them try once, let them try twice. This is exactly where, think about where the stops are now for those buyers, right? We're now up into these major areas of resistance. Again, big bear market right now. Buyers try once, buyers try twice. Where is their pain? That's exactly now where I can target my entry. And then one of my favorite kind of follow-ups on this is as we run lower now. Remember, there's a range down here, and these ranges act like magnets. So now draw a trend line off that low, bring it up around that high, look left, find those prior swings, and definitely grab that trap off of that high. This is one of my favorite kind of reversal setups in our trade room. Again, it's a two-try failure off resistance levels above a bear trading range. We try twice because it's such a big move going higher. And then as the market begins to roll over, we drill down. And I always like traps. Those are my favorite of my price action setups. This could be a trap. It could be a failure. It could be a pullback combination. And I know that most of you guys and gals have learned these setups. You've taken the free, the free course on our website. I get a ton of great feedback from you guys every week. Keep those comments coming because they really inspire me. But listen, if you haven't taken the free course yet, if you're here for the first time right now, if you haven't done that yet, definitely grab the free course. I'll put a link up here for you in the upper right-hand corner. That link for the free class, that'll teach you the entire roadmap that we use in our trade room. You'll learn all the setups, all the entries, when to take them, when to skip them. I'll tell you, if you're like me and you hate missing the best trades each day, or you're taking too many losses, or you're making too many mental mistakes, or you're trying to transition from a full-time job to full-time trading, that roadmap you'll learn in that free course will get you on the right track real quick. Start getting you some good results in your own trading. That way you're ready for trading with us in our trade room. So definitely grab that if you haven't learned those setups here just yet. Now, I would definitely keep in mind as this market runs higher, if this market does make this push going higher here, we may end up seeing it, right, start to slingshot going higher, buyers come back and pull back, and who knows, this could be going right into the FOMC and they may blast, right, and really run up through those highs. Where would the buyers love to get to? Where do you think these buyers would love to get to? They would love to get to that kind of, it's basically the weekly high on the Nasdaq. It's 11,811 and 3/4. It's basically that highest candle we saw on that big gap down on Monday. What I would keep an eye out for, if we do get again that slingshot running higher and we can grab that pullback. Again, I like the idea of that pullback to retest the high, but if that continues now and runs higher, okay, if that continues and runs higher, the most likely situation you're going to end up trading is a pop and grind. Okay, it'll pop up, it'll start to grind and go higher. The grind is basically all the bears that are short getting out. That's what causes it to grind. When it grinds like that, draw a nice tight trend line off that high. There'll be a swing down you can use. Find that channel off that low, and then you want to look left, find some prior swings, and you want that first test. Okay, so again, remember at this point now, right, we're buying that pullback, and it rips, right? It just rips right through those highs. Again, I'm kind of playing into the potential for some news reaction tomorrow. You know what I mean? I wouldn't expect this if we didn't have FOMC tomorrow. But FOMC, they love to go against what we think the news will be. If we think the news is going to be bearish, you can expect to see a really big bullish run. Then they'll dump it later on in the week. All speculation aside, though, if it pops and grinds, find that tight trend line, find the channel off a swing. We'll do this tomorrow, obviously, in the trade room. And then drill down, find that trap, find that failure, find that pullback combination. Again, I'm not going to go over all the entry triggers we use in the trade room, but again, if you want to get a full roadmap of that, definitely grab that free course link that popped up there in the upper right-hand corner. That's a pretty easy one, right? That's a pretty easy one here on the NASDAQ. Now, how do we sell it as it goes higher? How do we buy it as it bounces off that low? What if it keeps going lower, right? What's the game plan at that point? Let's go look at the S&P, right? S&P is very, very similar here to the NASDAQ. Pretty much everything I say on the S&P can be applied directly to the NASDAQ as well. We're very, very similar here across the board here. Most important thing right now in the NASDAQ, it's again almost identical to the S&P. The S&P almost identical to the NASDAQ. Excuse me. It's a bear market. With that bear market running lower, again, we're looking to sell at resistance above the trading range. The market shoots up, runs lower, and now again, we have the potential for that slingshot running higher. So everything I just talked about on the NASDAQ can easily be applied here to the S&P. It's the same basic idea. I won't bore you guys by repeating all that stuff that I said on the NASDAQ. The next big thing, very similar here again, is if you look back in time here, we are still, for the most part, trading inside of one big spike in channel. So I definitely like the idea of the short off this high. Again, we'll talk about that in a moment. But don't be surprised, though, if this thing slingshots off of this low, ends up giving us, right, that pop up and then dumping back down, because, again, this is that same level, again, it's the base of a spike in channel. We talked about this last night on the newsletter. The base of that spike in channel, really, really a very active area where sellers would love to sell short. So I love the move on the way up. I like the move back on the way down, even better as well. I really like that short off the high after that two-try failure that we spoke about. So very, very similar there on the Emini to the NASDAQ. Now, let's talk about the game plan here, right? So if we go higher, how do I sell this market? If we go lower here, how do I buy it off of that low? I love that. That double bottom reversals, it seems great. And then what if we break out and go lower? Okay, let's talk about a little more advanced tactics here. The biggest problem we're going to have here as we try to go higher is going to be this trend line. This trend line is going to be a big, big pain in the butt. There are two things that you want to think about. I guess three things. Yeah, 2.5 things. We'll call it 2.5. There's a couple things, all right, that you want to worry about here. Don't hassle me about that stuff. Anyways, as we go higher, I'm kidding with you. As we go higher here, right? As we go higher here, what's the one concern? Momentum, right? Momentum is definitely one big concern. Again, there's a very big difference between a bear market into a range and selling right there. There's a very big difference. I can be very aggressive selling when I just pop above the high of that range. But this is not the same thing. Now we've gone lower and now we're rotating higher. Much more bullish now. You will learn to respect these types of slingshot moves. I will make sure you're aware of those, the trade room. So we have to implement the two-try failure. That's one thing. The second part is this trend line. And so the trend line really, in my eyes, it's your best friend really at this point. Because what you want to do is you want to wait for it to pop up. Ideally, I'd like to get up into this area, you know what I mean? The amount we go below the range is the amount we go above the range. You know what I'm saying? So this area right up here, that area, this is your sweet spot for the interim short, kind of the medium pullback short. Again, we'd like to get it all the way up and then back down here for tomorrow. As we pop higher, though, use the 2-try rule, and then you want to get underneath that trend line, right? That's the real trick to this short going back in. This, as you can see, this requires a lot of things to line up. It requires the stars to align. It's definitely a good setup, but the reality is again, with that momentum coming off of that low, I've got to get these buyers at least trying twice. And then again, watch that trend line, because that trend line is going to be your best friend. What you've got to kind of be careful with is if it runs up and goes 1, 2, and then tries to go lower, you really got to be careful with those trend lines here, right? In those situations, what you want to do is, again, just try to get underneath it. And what I always tell my students is you want to have some daylight in between that trend line and the price action. Okay, in other words, be very careful when it goes like this, when it kind of hits like that, right? Those are the tough ones. What you want is you want to go, you want it to run lower, come back up, get those bears coming in, and get that short off of that high, right? It's just a slight variation of that 2-try failure, but with that trend line. Again, this is the same exact type of setup that we'll use on the Nasdaq, right? Nasdaq is the same basic idea here. 1, 2. Now, what oftentimes happens is you'll get the market popping up. It'll go 1, it'll go 2, and it will drop. And it won't give you a chance to get in off that trend line. What do you do in that situation? Traps, baby. This is where traps are your bread and butter. At this point now, this is why I said before, two and a half rules, right? This is what I said before, right? It's actually 3 things. Because if it doesn't give you that good signal, now remember, ranges are where good trades go to die. We don't want to take trades inside the range. So as we go back into that range, that trap, that's your money trade right there. And if we really get lucky, oftentimes we can draw a trend line off one of these lows up around that high. That's a really, really good setup. Because at that point now the buyers are already beat. We know the market now has rotated off the high, wants to bury that low, right? And so now we can go out, and as the market rolls over now, I just want to make sure we're getting above that range, right? That's always kind of the most important part. You'll get good setups, they'll trigger right inside that range, and they'll just fall apart on you, or they'll kick out of the range, stop you out, and then roll back down for you. So think about that now on the S&P and the Nasdaq. The key again is momentum and that rising support trend line. Now, what if we end up all the way back down to retest that low? Now what do? Well, at that point, there's a range above us. We're at a major support level. All we need now are signs of exhaustion. When you're looking for a reversal, it's not enough to just have a major support or resistance level. What we need is we need some sort of catalyst. Reversal patterns or reversals are best used whenever you have a major turning point, right? Like a major bottom with a range below you, and signs of exhaustion. So we've talked a lot about the 2-try rule here today. That's exactly what I'll be looking for to buy off of that low. As we go back down to retest that low now, yes, we are very bearish, but again, we haven't quite broken out yet. I'll talk about the breakout here after we're done on this. What I want to do is this is exactly where you want to use that 1 try, 2 try. This is that sign of exhaustion I was talking about. And then think about it. If I have momentum at my back, if I'm buying in a bull market, I already have a built-in edge because momentum is my friend. If I'm trying to buy in a bear market right now, I don't have any built-in edge. I need some sort of edge. And the edge we're going to get is those stops, right? We're going to use those stops because if you're a seller and you get stopped out, what happens? Yeah, you become a buyer. And so you could easily say the buyers are buying down here. And then when the bears get stopped out, the bears are buying as well. It's one of the reasons why I like to use these 2-try failures rather than just simply trying to pick a bottom or pick a top, right? It gives me that extra little bump of those stops getting run. That's the juice that makes these trades work. Now remember, at this point now, where does the market want to go? It wants to take out the other side of that range, and it wants to go back up and take out some of these other levels on the other side of that trading range. This is where we can really have some fun. Now, as the market rolls higher, and again, this is simply your 1, 2-try failure, as the market now rolls higher now we go out, we find that new channel. The exact same little dance we talked about to sell off the high. It's the same thing here to buy off of that low. Again, I always like to encourage my students to look left, find those prior swings, and really try to get that. What do we always say? The first test is the best test. Could be a trap, could be a failure, could be a pullback combination coming off of that low. I like that 1-2 try failure or a double bottom reversal with that range. And then, of course, that first pullback, grabbing that first test off of that low. Target is pretty easy at that point, right? Other side of the range, trend line, and maybe, who knows, right? A big runner back to that 3,800 all the way back up into that range here. Keep that on your radar. Now, what if we break out of the downside, right? What if we end up going up and then over, or we simply hold and run lower here? What are some breakout patterns we can use on this? Well, first of all, if you look at this, the S&P has a ton of open space. I mentioned this last night, I believe, or late last week on one of the recent videos. But the S&P and the Dow, they have quite a bit more space to go here right now. The Nasdaq, you'll notice real quickly here, the Nasdaq, you'll notice, has another major level right below it at that 91.5 level, right? 11,191.5 is the next kind of big level. So be aware on the NASDAQ, right? If it does go lower into it, we may also get that 2-try failure off of that low as well. What I want you to see, though, is that on the NASDAQ, we have to get through that 91.5, and then it's just party time down to 11,000, right? 11,000 is a big open space there. We really have look at this, a ton of space until 10,657.5. So a lot of space below, but again, NASDAQ has to get through that area, right? It's got to get through that area first. So be aware the NASDAQ has to be a little bit more aggressive on that breakout than the S&P does, right? S&P, if we can crack and hold below that 08 half low, we've got wide open space down to that 36.60 and a quarter, 36.22 even down there. Those are the next big levels here for us as we go. So let's talk about some breakout patterns, right? As we go lower, this channel will not be there anymore, right? We'll get rid of that. All of these breakout patterns right now can also be applied to the S&P or the NASDAQ as well, right? Here's one of them, a 1-2-3 breakout. Right? We retest that low. The bears come in, they try, and they succeed, right? So instead of the bears trying once, twice, and failing for a stop run and a reversal going higher, now as we take out that low, the bears come in and they what? And they blast, right? They jump off that moving average. Now remember, they have to hold that pullback. Remember, it's a range up here. And we know that it doesn't matter how strong that breakout leg is. That breakout leg can be nice and strong, but they have to hold that pullback, right? If they can't hold the pullback, it's going to go right back up into that trading range. Okay, ranges are really stingy like that. So we got to take that low out. We got to hold that pullback, and we got to blast, right? Really, really blast off that moving average. Now our job is pretty easy. We have a very strong move now. Anytime we see a strong move in one direction, we expect another leg in the same direction. So now it's just a matter of finding the entry. We'll draw a trend line off those lows, a trend line off those highs. I like to go out and find those bigger channels. I call them hidden channels in our video classes. And then I'll drill down, find those traps. Really the goal though is you want to get a channel so you can get above the moving average, right? That's kind of one of my secrets to success over the years is I try to look for if I can get a 1, 2, 3 move going lower, right? If I can get that kind of 1, 2, 3 going lower here, what I'll do is I'll strategically find the bigger channels up here just so that I can get above that moving average, because above the moving average is where you can fool those inexperienced traders, right? Get it back above the EMA, buyers will come in, try to buy it going higher again for whatever reason, too bearish to be buying this. But once those buyers come in, try to buy off that moving average, now you know their stops are right there. It's a very easy trade at that point. So, and again, we'll do more of this tomorrow, more in the trade room, but when the market makes those 1, 2 jumps like that, what I'm doing is, the easy part is anchoring those lows. Then I start to look left, look up top and think, okay, how can I make this channel wide enough to be able to get that pullback just a little bit above that moving average? Because that's where you get stuff like this, right, where it'll get above the moving average. The buyers will come in, they'll try to buy it, and it's easy pickings to sell it right back down again. That's the idea we're looking for here over here. I also like that pop and grind going lower. I also like, too, if it was to roll lower and start to grind down, right? I like that. That's one of my favorite kind of chart patterns right now. Same idea on this. The difference is, of course, on this one is that it's not taking out that low, pulling back, and then blasting, right? What it's doing is it's taking that low out, the moving average comes over, but it never really pulls back to it. You know, it kind of grinds down and grinds down. These can be a little bit frustrating because they don't feel very strong. You know, it's not like a big blast. It just kind of melts down as it goes. It's a pretty good giveaway, though. Mark that low. Mark that, again, find those big highs up there. You know, not too big, right? But find that next kind of major swing up there, right? And then find that new channel. And then my kind of trick is I always go out, look left, think about where can I find some traps, get above some of those prior swings. And again, if I do my channel correctly, I'll get above that moving average, trap in those buyers who are trying to pick that bottom and sell right into those stop losses. Where's my objective on this, by the way? Where does this type of breakout pattern want to go? It's always that first leg, third leg. Again, we know we have that 3660 area we talked about a moment ago. But think about that breakout leg, this first breakout leg. The size of that leg is almost always the size of that pullback and follow-up leg. Trends love threes. The first leg and the third leg are very, very symmetrical most of the time. So keep an eye out for that kind of pop and grind as we go lower here. All right, I think we've covered all the main components as we go up, as we go down here. I'm very anxious to see how the overnight session looks, because when you get these slingshots off the low here, they really create some very nice moves in the opposite direction. Keep in mind, too, with news tomorrow, stay out of the middle, right? We don't want to trade the middle. Remember, keep out of those middles. Let's keep going, though. Got the S&P ready to go? Got the Nasdaq ready to go? Oh, yeah. Let's get the oil ready to go here. Oil is an interesting one tonight. I'll tell you, oil is full of tricks these days. It makes sense. You know, there's a lot of turmoil kind of in that market right now. What's the most important factor that we have right now on the oil? There are three key components here on this. One of them is standing out like a sore thumb. It's this very strong move. Remember, anytime we see, just as we talked about last night, right? We mentioned this last night. Anytime we see a strong move in one direction, we expect a retest of that high. That's exactly what we expect here at this move going lower. We know at this point that the bears have to be respected. Okay, we never know anything for sure. What we do know, though, is the odds are the bears need to be respected for that retest of that low. Okay, that's one very big clue. Then, once we get back to that low, do we see that double bottom reversal? Do we see that breakout and go lower to maybe 111, maybe 110 eventually? 115 is right down there, right? Or do we go sideways down there? That's the first clue. Second clue is, which I think is very interesting here on the oil, and we don't see this very often, but this is a very interesting part of this chart. You'll notice that this blue line right here, that's last week's close. And as you guys probably know, I talk about as we go into Thursday and Friday, those last week's closes, right? Last week's closing price. It's last Friday's close, right? So that level becomes a magnet the later we get in the week. Okay, so once we go to Thursday and Friday, all of a sudden we're using those blue lines as targets, right? Not usually that effective Monday, Tuesday, Wednesday, but again, Thursday, Friday, bam. Well, you'll notice on this one, the amount we go above that prior week close just so happens to be exactly how much the move went lower. Now, this could be a coincidence. You know, it definitely could be a coincidence. I'm a very big believer that as humans, we oftentimes put more value to stuff than we should. And of course, there's a big range you can see here if you look out, right? Big range top, big range bottom. So again, this may be a coincidence here. I may be making more out of this than I should. But at the same time, it's a pretty big clue, making us think right now that the oil traders are basically obsessing over this 120.47 area. And because there is a big range, which by the way is the third clue on this, right? Ranges everywhere right now. Range above here, range back there. I think probably the biggest clue here Again, if you go back and look again, you can see we're basically just one big trading range, right? Market goes up, goes down, goes up, goes down. So would it really surprise us if oil just rips right back higher again, right back to? No, it should not. It should not. This is definitely one big trading range. And again, I think that kind of pendulum swing above and below that prior week close is a very telling sign when you apply it in the lens of this trading range. So once we know that, once we kind of know all three of these items here right now, how do we trade this? Well, the key really is what we get here on the pullback. Buyers, right? Buyers have some options on this right now. Buyers can get aggressive. The most aggressive entry right now to be a buyer would be what we call a crown reversal. One try for the bears, two try for the bears. This is a pretty aggressive trade long. And the reason is because of the strength of that move. You'll notice what I'm doing here. Bears try once, bears try twice, and that trap. Okay? You want the trap before the retest. Okay? Let me say it again. You want the trap before the retest. Okay? We call these crown reversals. They're a little more aggressive. Okay, if it was me taking this trade, I would go half size, quarter size, third size, right? Because it's not well, again, if I have a retest of that low now those buyers can come in, and now mission accomplished, right? Remember, once the sellers retest that low, now all the big players out there, they made their money, they're taking their profit. Now the weak hands come in. Right? The ones that don't know how to read a chart quite yet, but insist on trading real money because, you got to pay your tuition to the market, whatever excuse they give, right? Bears try once, bears try twice, right? We come out 1, 2 tries, and again, there's those stops. Now, in this example, we can be a lot more confident in this reversal now. Why? Because at this point now, the bears have already retested that low. They've already taken their profit out of this market. Now, these are the weak hands, right? These are the inexperienced traders with small accounts. They can't defend themselves as well. Tight stops, right? And this is exactly where those 2 try failures will come in, and then into that new channel as we go, right? As we go higher. Right, which by the way, I love these trades. These are one of my favorites right now. So 1 try, 2 try, again, double bottom, retest that low, rope in the weekends, use those stops as, pardon the pun, but fuel, and then of course we go higher here and we grab that first channel test. Again, could be a trap, could be a failure. Usually it's one of those two on the moving average. And where does this market want to go? It definitely wants to go back up into that range above and probably wants to really go up and take out those 123 level, right? 123.5, 123.68 as we go higher. Okay, that's something to think about here as the market kind of rotates around this low here. I also think, if I can clean this thing up a little bit here, I also think too, because you can see this trend line, I also think too, if this thing was to start to really pop and grind, right? Pop and grind, pop and grind. Remember, pop and grinds are a sign that the other side of the market is basically walking away. That's what results in that grind, right? Those are not buyers buying it in that situation. Those are sellers getting out of their positions. It's basically what that is, right? So once we see that pop and grind, now the odds of a retest down here go much lower, right? Not as likely now to get that retest. We start popping and grinding, we find that high, we find that low, right? And now this becomes its own strong move, and now we're looking for that pull back. Again, if you want my opinion, find some traps, make sure we're drawing that channel off those highs, speaking of traps, trapping those bears, right? And look to finish off that retest of that high, leave that runner up around that high as well. So those are some buy setups I really like as we go higher or as we go lower here, right? So keep those on your radar. How do we sell this market right now? What's the best way to sell it? Well, first of all, if we can get up around these highs here, my biggest problem is going to be that trading range. It's difficult to ignore it. Again, like I said earlier, that kind of exact, almost to the penny pendulum off of that 120.47 is a little bit too convenient here to ignore. What I really want to do is, I've got my channel drawn in a little bit wider here. I really like this area right here. What I don't like is the momentum we're going to get on that deep pullback. This is exactly where a 1 try, a 2 try, if we get it my way, if we get what I really want tomorrow, it'll be that trap high to really protect ourselves and get that drop going back down we go. The big thing here is, though, is because of the deep pullback, again, we know the bears want to retest that low, right? With that range above us, though, with one big range here, you have to think the buyers are going to give this thing hell, trying to push this thing back up to that high here, right? I would if I was a buyer. Let them try once, let them try twice, and once we saw those buyers trying, now we know those stops are fuel. And remember, as it goes lower, one of the nice things about these deep pullbacks and these 2-try failures is that as it starts to go lower here now, remember that trap we talked before on the S&P, that's your short for your add-on, right? We pull back up into the sell zone. Again, we want to kind of tame those buyers, let those buyers help give us an edge here. 1, 2 for the bulls, hit those stops for the short, and then as it rolls over, grab that trap. Why a trap? Because traps are your best asset when you're worried about selling low. When you're trying to sell and we're almost back down to retest that low, because that's the objective, that's where traps come in, because they allow you to sell as high as you can. Hey, great way to sell there as we go. I also think too, you'll notice here as we go lower here right now, I also think too in the short term, remember we always say, right, shallow pullback traps, deep pullback 2-try failure. This is exactly where a shallow pullback trap could be in play here. 1 try for the buyers, 2 try for the buyers. So if you're watching this and trading the overnight here, that is definitely a setup that is worth considering. Again, just because of the fact that we have that big strong move for those bears going lower, right? So definitely keep an eye. And again, traps are best whenever you're worried about selling too low. And this is exactly the definition of selling very low, when you've got major resistance levels still untested up overhead. So watch out for that trap as we go lower. Now, what if this thing starts to run and really push? This is exactly where those breakout patterns come in handy here. Get a range below us. Remember, though, this whole area is a big range bottom. So we have to really remember, first of all, what's the objective? The objective is to retest that low, right? That's the objective. They have to push through that low. Okay, that's bare minimum criteria right now. Because again, if they can't, after a couple tries, we're going to get that stop run and that short squeeze, and we'll get that reversal off of that low. But just like the S&P and the Nasdaq, if they can retest that low, if they can hold that pullback, and they can jump or blast right off of that low, the strength of that move says what? Expect another leg. We find that low. Again, find that high, drill up around that high, find those prior swings, and you want that, right? You want that trap, or you want that first test, whichever entry setup you get off of that high. Where is our target in that scenario? It's that first leg. Remember, first leg, third leg. That'll give you a good way to fine-tune that next final runner target as we go lower. I also think a pop and grind. We take out that low. We start to grind down. That's an easy setup now. Mark that low. Mark that high, right? Find those traps or failures, right, off of that high. First leg, third leg is your objective. All right, be very careful with those 2-try traps down here. These are not the scenario for a 2-try trap, right? If we start to really punch, right, that is a scenario where a strong move up, because again, now it's a short squeeze. Now we know, right, now, I shouldn't say gravity, but now the short sellers getting out will help the market go higher. This is an area where a 2-try trap is a great trade, right? This type of breakout going higher is where that strong move, shallow pullback, right, and then higher high. That is where that trade is very useful, because again, it's like putting a paper cup on a river, right? It'll just get dragged right along with the current. That's a good setup there. I don't like that trade down here. Right? Because again, well, I mean, let's face it. If it really blasts, right? If it really rips through those lows, then anything goes. But when you're trying to break those lows like that, it's not exactly what you want to wait for. You want to wait for those 1, 2, 3 moves, or wait for those pop and grinds. Those are the ones that will give you the best fighting chance to get that easy money pullback right off the high of that channel. All right, guys. Boy, we have covered a lot here on the video tonight. We got the game plan put together for tomorrow. Tomorrow, 8 o'clock Eastern time. We prepped our charts. We're going to come back. We're going to trade that plan either tomorrow morning in the trade room. Don't forget, if you're looking for a great place to learn and trade along, if you're missing the best trades right now, or you're taking too many losses, or you're trying to transition from full-time job to full-time trader, our trade room is the place to be. That's where all the good stuff is every day, Monday through Friday. I'll put all the free course links, all the membership links. I'll put everything right below this video on our website or in the description of the YouTube video. So grab that to learn more. If you have any questions, don't be afraid to use that live chat tool on the website. Drop those questions in the comment section as well. And don't be afraid to call the office. I'll be here to help out every step of the process. I do know I speak pretty quickly on these videos. YouTube wants these videos as short as I can make them. So I try to speak quickly on these videos. I know I kind of go quick, but we'll gladly slow things down when you call the office. Make sure we have all the pieces put together that you need. Get the computer, the broker, right? All that stuff, all the software set up so you're ready for trading with us here in our trade room. We've had a fantastic week so far. Looking forward to some more good stuff tomorrow morning. Hopefully I'll see you tomorrow morning as a new student in the trade room. If not, you better come back and see us tomorrow night. Again, save those bullets tomorrow afternoon, because we'll come back to Reaction Thursday on Thursday. One of my favorite times to trade is after a big news event like an FOMC or like a non-farm payrolls, right? So definitely be ready for another great video coming tomorrow night, getting ready for Thirsty Thursday. All right, guys, that's it for me now. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.